We're going to be discussing what appears to be the end of yet another prominent 280E case in our industry. We are going to unpack what businesses can learn from the recent results of the Harborside Inc. versus the IRS Appeals Court ruling. If you aren't familiar with the case, this has been yet another long saga in the cannabis industry's ongoing fight for fair taxation and an even playing field. The case dates back to 2016 when Harborside Incorporated, a California-based cannabis company, took the IRS to the U.S. tax court with the goal of invalidating 280E. In late April, this case ground to a close as a U.S. appeals court rejected Harborside Inc.'s attempt to end Section 280E of the IRS tax code. Section 280E has been difficult for the cannabis industry to navigate and has proven a major challenge for many businesses, costing the industry millions in additional taxes and penalties. Taxes and penalties, mind you, that businesses in more mainstream industries aren't obligated to pay. So today, we're going to be taking a look at the overview of the case, a recent history of 280E cases, the justification for the ruling, and what cannabis businesses can learn from this case. The information contained in this presentation is meant for guidance purposes only, and not as professional legal or tax advice. Further, it does not give personalized legal, tax, investment, or any business advice in general. Keep in mind that Harborside is just one of the many cases in a long list of high-profile cases that involve the IRS's enforcement of 280E and auditing the cannabis business. This particular case involves Harborside's corporate income tax liabilities for tax years 2007 to 2012. In its first assessment of these tax returns, the IRS disallowed almost all of the deductions and exclusions that Harborside Incorporated made on the tax returns in question. This could have made for a taxes and penalties tab totaling approximately $36 million. Harborside was able to appeal to the IRS, and the agency did agree that the company had made overpayments on taxes involving purchases of goods they could have legally excluded. These exclusions brought down the taxes and penalties tab to $11 million, the total owed by Harborside and its parent company. Unsatisfied with the small victory, Harborside decided to take this case to the appeals court. Harborside and its legal counsel had a two-pronged approach to addressing their case. Number one, try to totally eliminate 280E on the grounds that it was unconstitutional. And number two, seek more favorable rulings on some of the additional business expenses they deducted. Even though Harborside was unsuccessful in eliminating or modifying 280E, they were able to reduce the total they owed in taxes and penalties. In our last video, we discussed why and how the IRS is auditing cannabis businesses, and why the IRS has taken such an interest in the industry. There have been several prominent 280E cases that have been in the spotlight over the last few years in particular, but as far back as the last decade. A few other notable 280E cases that involve extensive IRS audits include Altermeds, which owed $391,242 in back taxes, in addition to nearly $80,000 in penalties. Northern California Small Business Assistance Inc., which owed $1.5 million in back taxes and penalties, and Richmond Patients Group, which owed $1.9 million. So as you can see, Harborside is just one of the many large projects the IRS has pursued in auditing the cannabis industry by enforcing 280E of the tax code. And the history of success contesting 280E is not good. Attorney James Mann, who served as legal counsel for Harborside, made a public statement that banning deductions for business activities like acquiring raw cannabis is unconstitutional. This is due to the fact that this is a tax placed on the gross income of the business, not the net. His appeal also addressed the fact that the IRS does not offer cannabis companies the same deductions and exclusions for cost of goods sold as other mainstream companies that do not do business with substances that are considered federally illegal. In a recent statement, he went on record to say, "The IRS and the tax court have been taking a very restrictive view of what COGS mean for cannabis businesses. The argument is that Harborside should be able to calculate its COGS the exact same way as Whole Foods. Ultimately, though, the Harborside case did reach a conclusion this past February, as the U.S. appeals court denied their hopeful lobby to end 280E. The tax court also resolved that Harborside could not claim deductions for depreciation or the charitable contributions they made as a company, citing that this was also prevented by 280E. The final total for Harborside, not including San Jose Wellness, resulted in $4.2 million in back taxes and penalties. There's a lot that cannabis business owners, partners, and investors can take away from this case. The biggest takeaway is that optimistic accounting for 280E is not going to fly in the face of an IRS audit. The saving grace for Harborside, which successfully lowered the tax bill from $36 million to $4.2 million, was that the company kept diligent accounting, financial, and operational records. This allowed them to argue the nuances of their tax situation and provide evidence for how and why they made their decisions. They also earned credibility with the tax court for good faith practices, meaning the tax court did not feel Harborside intentionally committed fraud. This helped limit the penalties and earned a more favorable ruling. Consider this another learning experience, and that you should always make sure that your business is better prepared for an audit by operating within the law and the tax code and being diligent about your taxes, bookkeeping, and finances. Unfortunately, not all accounting firms are specialized in working with cannabis companies. Mainstream financial advisors or your local accountant may not be aware of all the nuances and special tax treatment involved in your business. The best and safest way to minimize risk and maximize the growth potential of your business is to partner with dedicated cannabis accountants, like our experts at GreenGrowth CPAs. Tax and financial experts who work in the industry are going to be your best defenses for staying compliant with 280E and protecting your business in the event of an audit. Thank you so much for your time. We hope this information has been helpful. If you have any questions or want more information, please leave us a comment below. And be sure to like this video and give us a follow to learn more about the cannabis industry.